Well, the U.S. is best. That's the take today from our next guest, who advises ultra-high net worth clients. Mary Lago is with Ferguson, Wellman, and joins me here at Post 9. It's good to see you.
Great to be here.
How do you feel about these markets? What are you telling your ultra-high net worth clients? You're trying to, preserve their capital, but everybody wants a good return on it, too.
Preserve and grow, and the U.S. has done a great job of that. We think the U.S. economy is in really solid shape. And as we look forward, we expect those key economic indicators to move in a fairly tight range over the next 12 months. And that's a really supportive economic environment for domestic earnings growth as well as returns. And the market has shown so far this year it's rewarding.
What about what I mentioned earlier to some of our guests, these calls that the best opportunity is now outside the U.S., that we came into this year thinking U.S. exceptionalism for obvious reasons. But now there may be better, less volatile opportunities elsewhere.
We follow the earnings. So fundamentally, Ferguson Wellman pays a lot of attention to the earnings. And if you look at earnings growth for out the international markets, it's at about 8.8%. Whereas if you look at U.S. markets, despite the fact that Q4 earnings came in higher than expected, so those forward-looking earning projections have come down just a little bit at about 12.5 times, we still like 12.5 times better than 8.8, and we believe we have a more solid environment here.
Where do you want to stay in terms of the cap space, market cap-wise? Big?
Big. We remain overweight large cap and overweight domestic. We still have some small cap holdings. We still have some international holdings, but slight tilts to the underweight. We like some of the names that are well regarded in the market space already, like technology, Mag 7, not in all of them, but overweight in a number of them, and like industrials, communication services. So we still see some good growth opportunities, and the earnings projections are looking really strong. Do
you think there's going to be a prolonged broadening out of the market?
Absolutely. So if we look back a couple of years, we were seeing contraction in the earnings growth of the other 493 stocks. They were really concentrated within the Mag 7. We saw that broaden last year. We expect that to continue to broaden this year. Even so, if you look at earnings, the earning growth potential still looks better in the Mag 7 than it does across the rest of the market.
What kind of risks do you see? I did the story early in the show today about M&A guidelines staying in place from the Biden administration, a surprise at least now to many who figured, we're going to get animal spirits. Deregulation is going to lead to a lot of big deals. Well, maybe not so much, and maybe there's going to be some other volatility around tariffs and other parts of the policy. What do you think?
Volatility is a given. Volatility is the price of admission, but we still look longer term in the markets. If you think about, even with all of the policy conversations that have happened so far this year, U.S. markets have seen through it. If we could take January's return of 2.8% and multiply it by 12, I think most investors would be pretty happy for the year.
What don't you like within this market? What's a sector you would avoid?
Real estate is one we've been underweight, we've been thinking about adding to, but it's proving to be very interest rate sensitive, and especially with fears of potential inflationary pressures, we're remaining on, and rate sensitivity, we're remaining a slight underweight there. Remaining underweight consumer discretionary. So I know that's a little unpopular at the moment, but we think that we're not going to get any big lift from moves in interest rates or inflation there, and consumers have spent a lot of their excess reserves, and so that's another one we're sitting on the sidelines.
Does that mean your base case is higher for longer? You think these rates are going to remain elevated for longer than some people think?
We won't be surprised at all if we don't see another Fed rate cut this year.